Hi, hello everybody. We are here on a new episode of FinFluenced with Technisys. We have today Chris Topazi. He's the president and CEO of Fintech Advantage. Hi, Chris. Well, please tell us a little bit of your story, of your journey, and how did you get here?
Yeah, great. First, German, thank you for having me, and thank you, Technisys, for conducting this interview and the great work that you do in the space. And I'd be happy to tell you a little bit about myself and my company. So, I'm a software developer by education and by trade. I've worked for two large regional banks in the Southeast in the U.S. and held various roles, including the head of application development, where I've had responsibilities over the entire software portfolio, and including responsibilities over the capital budget process, various committees, and all the reporting responsibilities. Some of the key systems and projects that I've worked on and architected include the enterprise big data during the financial crisis to satisfy commercial credit reporting, as well as digitizing treasury type processes and commercial credits in times of critical M&A activities. And now I'm the CEO and president of FinTech Advantage, where we partner with client banks and fintech companies to drive innovation, starting with core modernizations. As you can imagine, that's the centerpiece of everything that is modern, as we push tech stacks to REST APIs in cloud, the cloud world. Hopefully that's a good starting point for our conversation.
Okay, yes, that is a very good starting point of the conversation. And I was thinking about all that journey and how the industry have evolved in the last 5 years, especially in the last two. What are your thoughts about how have you seen the industry evolve in these past 5 years?
Yeah, that's a really good question. So I would start with the perspective of financial institutions and their acceptance of digital challenger and non-banks as legitimate threats, in large part to the lack of technical and process debt that those threats have. Now, if you take COVID aside, and banks' kind of self-realization that the time and cost that their projects have to meet customer demands by layering systems on top of a rigid core, there's a widening gap between those non-banks, neobanks, challenger banks trying to meet customer demands that financial institutions with legacy technologies kind of face in this next phase.
Yeah, and that's actually the reason of the appearance of these new technologies and the next generation core banking stacks. What is your experience on that? What do you think about the next gen core's benefits in terms of solving those business problems that the banks have coming?
So that's another really great question. With my professional expertise in being the head of application development and running the entire portfolio and owning the core systems, what I could say is the next generation banking cores offer things that we're not accustomed to, which are very rich and robust data structures that really set the foundation for assisting in curated customer experiences. We have a history of having to extract data to do things like householding and relationship grouping. Next generation cores kind of foundationally set the stage for this already. And I've spent the last 2 years, 3 years doing my due diligence on a large set of all of these next gen cores. I would say also that primarily they're all based on new API structures. And I would say REST API. Anybody that's familiar with modern technologies and you hear open API or open banking, it's built with a concept of real-time processing, not batch processing, which is a very large jump in what we do in banking. And next would be the scalable systems, and they're scalable by nature for multi-channel customer journeys and customer experiences. I'd say those are the basic three: rich data, open APIs, and scalable systems. It changes how you can price those out and how we pay for them. Well, what the true blocker is typically banks don't realize what the undertaking size is. That's the blocker. The blocker is, do you have an executive that knows, if it's a bank, do they understand the actual amount of effort that goes into it? And do they know how they're going to deploy it? And do they know the financial product that they want to deploy? And do they know the cost of the ecosystem? Because the difference is, if you go to a left and just deploy a bolt-on core, that's one thing. You've got a financial product with a subset of only one consumer or commercial, one entity that doesn't overlap your customer base. That's great, because you don't have too much. All you're doing is writing to your GL. The opposite direction, if you try to do a lift and shift of your entire traditional bank, you impact your entire ecosystem, your entire software ecosystem. So what are the blockers? The blocker is knowledge and organizational change.
Yeah, I agree, and that was the purpose of the question. Mm-hmm. Typically, technology is the less of the problem, of the blocker. Organization change and process change and probably new operating model for the bank to adopt this new technology for really making that change that the customers are looking for is the biggest of the challenge, at least in our experience.
Well, to that end, it may be the biggest blocker, but if the same innovative mindset from the top down realizes that organizational change and process change is the biggest blocker, it's also the biggest benefit. We come from such a space that, because we're so regulated and document heavy, if we could get over this idea of real time and digitization is native, then our processes are all digital by nature. We're not taking documents, we're not moving a document down the line for approval in each one of our approval steps so that we can book it in funding. It is now a native, close to real time in every one of our processes. Is every bank process, every bank financial product goes through the same process. From the point of sale to some sort of document, collection, to approval, to perfection, to those QA steps, all the way to booking and funding, to the maintenance and monitoring, then the federal regulatory. So if we get to the point to where to understand that the cores function in a real-time space is no longer creating documents and moving them down the line, but it's those curated customer experiences and closing the gap between what is truly automated in things like the approval steps and now we've got it natively to report on once it's curated to the Fed. We've got the capabilities, especially as cores like yourself that can accelerate. And I've seen it in the last 2 years, how quickly product enhancements, financial product enhancements are rolled out on a build cycle. It's so fast that I think it's it is going to be, it's going to be a new world.
Yes, it's that the main point is the industry. Not only the industry is evolving, as the customers are requesting, most of these changes, and adapting to those customers' requests requires that speed to market. We typically say right here, right now. So for the bank that used to be, the way I want, the way I say, the way it is. Sometimes the excuse is the regulator, but sometimes it's true that the regulation makes that change hard to happen. But now, the pace for change is, is something that the banks have to embrace.
That is another really good point. Then the next generation space is so new in the last 3 years. There's a tendency to look at software providers, all software providers, as a client-vendor relationship because of our third-party risk and vendor management inside the banking space. And with all of this catch-up with non-banks, neobanks, challenger banks, it is a muscle that financial institutions don't have to realize that to adopt next generation technologies, it's no longer client vendor, it's partnerships. It's to realize you're not buying, and it's a term that we've used for years, vaporware, software that doesn't exist. Well, software has to be developed when there's a demand for it, and there's a demand for it. The only software that gets built and funded without demand is when a VC firm pays out of pocket because they think there's going to be some sort of financial reward. When a bank comes to an next-gen core and says, I'm willing to do it. A core is not regulated. A bank is regulated. So if there's there's no Reg E compliance for a core. The bank has to be Reg E compliant by implementing things like ACH. And then therefore, that's why typically banks will go out and buy software that's already proven software. And this is the partnership that we have to get used to doing. And that's the risk culture. That's the innovative culture that I think is the blocker from most financial institutions. Is someone has to go first. And once those institutions go first, there will be dominoes to follow. And the financial products or have been demonstrated to be added on to the next gen cores very rapidly. And it's starting with the consumer space, obviously, because cash deposits have to be collected before you can start with the commercial side. And matching up your financial institution's identity with the next gen core in the space is a large part of what is the question that has to be answered. And that's the deployment model. What are you trying to replace your whole core, and what is your identity? And your identity is quite tailored to your asset size and your market and your customer. And then, of course, what other things do you want on your balance sheet that may not be a part of your identity today?
What do you think is the most relevant trend that we will see in 2022? I have heard many, beyond technology, we are always living with buzzwords, in some cases are real trends, some cases are just words that fade out with the time. But what do you think in 2022 is a real trend from this banking new world?
Right. A really good question, and I think every one of us have looked at the blockchain technology for years, and everyone's kind of kept a pulse on it to say, when is it going to be viable? It's not a matter of is it going to be viable? It's a matter of when is it going to be viable and what are its implementations. The implementation of blockchain for a currency with Bitcoin years ago was fantastic, and now it's what is obvious in the next upcoming year, or bank adoptions, and then I would expect a U.S. currency in the next couple of years to counterbalance and create some regulation around it. But with bank adoption in the upcoming 2 years, to empower that significantly. So if I'm a financial institution, I look at those two things: is how do I modernize my core to close the gap between the fintechs, and then also how do I start to adapt maybe that as a new asset on the balance sheet.
Okay, great conversation. I think we reached the time we expected. Of course, we didn't reach the content or the insights that we would like to have. But again, thank you very much for being with us today, and look forward to keep talking about this exciting new world of banking.
Yeah, same here. Thank you, German, for your time, and I look forward to it as well. Thank you.